There's many great things to say about this company, Dropbox, and the only thing that people really look at, and their only real reason why a lot of people don't want to invest in Dropbox, is the fact that they're dead, and also the fact that they don't have all out of all of the people using their product, not a lot of them are paying users. But that doesn't worry me, and I'm going to talk about why, as well as I'm going to give you price predictions in the future for this company. So the fair value of this company based upon a free cash flow calculator that I got from a YouTuber. Everything else I made, but I got this from a YouTuber whose channel will be linked below in the description. Anyways, the fair value is $22.55. And the 5 year projections for this company is $63.30. The 10 year projection for this company is $117.44. And the 1 year projection is $21.22, which I think is really accurate. Also, the financial health of the company, if you're worried about the debt, we'll look at the current ratio and quick ratio. It's all above 1. Now, it's not too much above 1, but it is. And as well as the management is very effective and it's really good. So that is why I'm not worried about it, because I've done the research on the management and I totally believe in it. Plus, the management is a billionaire and it has connections and talks to people like Jeff Bezos and eBay's founder and CEO. So basically, this CEO hangs around some really smart and good people, and I expect him to do really amazing. So you can see the price to earnings ratio is really, really high, but don't let that deceive you because this company is undervalued. Also, you can look at some other ratios, and so you can also see the total assets, liabilities, the total equity. Then you can see the shares outstanding, and the book value per share is 1.93. And the technical price, based upon kind of how it trades, based upon these ratios, you can expect that it can reach $14.29. But don't let that fool you. Technicals are not always something you should look at, and then this is not really a technical analysis. It's just what I got based upon the PE price target. So what I essentially did is I multiplied the PE ratio times the net income for the trailing 12 months, and then divided it by the shares outstanding to get kind of how it would trade based upon that. And the same thing goes for each one of them. For each one of these price targets, so I did it based upon the free cash flow. Based upon the cash flow, then based upon the price of sales or the revenue, and then based upon the book value, price to book, and then I got an average. And so, yeah, that's what it says. Then you can see what the analyst price targets are in 1 year. So the highest is at $37, the lowest is at $21, and the average is $27.50. And then we can see that it has no dividends. And then you can see the next quarter estimates, which all of them are negative, but it's only based upon the PS ratio and the PE ratio, and based upon the revenue and earnings. And so it gives you kind of a negative thing because that PE ratio is really, really high. And so that is kind of why it's negative. But I really do estimate that this company is going to do really amazing next quarter. I think it's going to blow what everyone thinks. But this is based upon fundamental. It's not even based upon market sentiment. All of this is fundamental. And so you can also see the EPS estimates. So analyst EPS estimate in 1 year is 28 cents. The last quarter EPS is 26 cents. So that was how it was last quarter. And the next quarter EPS estimate is 15 cents. But the analyst's next quarter EPS estimate is 22 cents. This is based upon fundamental things, and it's based upon if they grow at the same rate they have been. And so I really do expect them to be growing even faster. Therefore, this can be totally wrong. But that is the estimate. And so the analyst price prediction is, $21.26 based upon that. But that is not totally correct. And so that's what it has there. So then we go to the price projections. How did I get this? Well, I got a lot of different price projections. This one, it's all the way from here to here. Everything I have highlighted, that is the price projections for this company. And then I just found an average. So it's lots of different perspectives. I got the fair value. I got the technical price. I got the average analyst price in 1 year. And yes, we are using five. This is a 5 year projection, but we want to get it what the analyst will project in 1 year because it makes it accurate. It just does. So the price in 5 years based upon a PB ratio currently, and also the price in 5 years based upon the PE ratio currently. Then we also get the price in 5 years based upon the PS ratio currently. And then we get the price in 5 years based upon free cash flow. And then we just average all these different things out to get the price target in 5 year. And I think it's totally correct. And as you can see, the upside is tremendous for this company. So you can see expected revenue and expected earnings, which I essentially get by multiplying the revenue now times 20. So let's see. E25, that's a cell. Let's see, because I kind of forgot what I multiplied. So here's E25. So yeah, all we did was we multiplied the last quarter revenue. I multiplied the last quarter revenue times the PS ratio. I mean, not times the PS ratio. The last quarter revenue times 20, because there's 4 quarters in a year. And then we're going out for 5 years. So 4 times 5 equals 20. So I just multiplied that last quarter revenue times 20 to get the expected revenue. Same thing with earnings. And then this represents EPS in 5 years, which I expect, and then the RPS, or revenue per share, in 5 years. And then I did the free cash flow per share. Then I got the assets and equity to get the book value per share. And so I have 4 things to go off based on there. So EPS, the RPS, revenue per share, free cash flow per share, and the book value per share in 5 years. And then I just multiplied that times some multiples that are really very accurate. And this is based upon if it grows at the same rate it's growing now. It's not even multiplied by the future projections for the P ratio or PB ratio or PS ratio. Therefore, you can see where this company is going to grow a lot, and I really do expect all of these things to happen. That's my price prediction for Dropbox. That is what I think about Dropbox. Now, if you don't like to look at numbers as much, maybe because you're a growth investor, well, then you can look at my previous stock review on Dropbox, where I kind of gave you why I expect it to grow so much other than the numbers. And the numbers are aligned with what I'm saying as well. And therefore, that is why I'm extremely bullish on Dropbox. Now, you may be wondering, from my last videos, I used a different spreadsheet to determine all this. Well, I noticed that it was just based upon the PS ratio and the PE ratio, and I didn't really get a very well-rounded experience, not a well-rounded experience, but a well-rounded review of where I think the company will go, because it was only based upon the revenue and earnings. Also, it didn't show kind of the estimates in management effectiveness or the dividends, and it didn't look that clear. It looked really complicated. So hopefully this will be easier for you to view and see. Also, this will be linked in the description, as well as the YouTube channel, so you can get that free cash flow calculator that he made, which is downloadable. So yeah, that's what I have for this company. That's what I expect from this company. If you found anything useful in this video, if this was very useful for you researching this company further, well, definitely think about subscribing. Thank you for your time, and make sure to subscribe for more, like I said. And yeah, thank you for your time, and goodbye. See you in the next video.